Business Tonight studio in Johannesburg is Mark Ingham from Ingham Analytics, and also Ashraf Mohamed from Regiments Capital. Gentlemen, it's been an extraordinary week on the JSE, and when I say an extraordinary week, an extraordinary day yesterday. Ashraf, okay, 50,000 we know about, but above 50,000 by such an extent, and with SAB and Sasol, both of those companies beginning with S and next letter is A, above 600. Can you believe it?
Well, it's, it is unbelievable. I watched your earlier show, Lindsay, and I thought you weren't going to mention it again. But, I do think that it is rather extended, and even with the adjusted PE of around 22, I don't think the growth prospects really support it. But people are nervous about where the rand is going, and they're chasing rand hedges. I mean, that's what's really driven the all share above 50,000 over the past 2 weeks.
I want us to unpack that even further because, as you mentioned, Lindsay recycles information, but SAB, Miller, Naspers, MTN and Sasol, which have all been pushing the market up quite strongly, they're down slightly today. Does this just show us that these darlings of the exchange still find it difficult to find value in such difficult times, though?
With some of these stocks, you must look at the underlying dollar price, sterling price, for instance, and it doesn't look quite so rosy if you look at it in real money. But take Sasol, for instance. As Ashraf would attest, the two key variables are the currency and oil. Oil's been fairly stable the last number of months. It hasn't moved terribly much. But with the rand off, and we saw with the announcement that they had for their 9-month result, Sasol actually doing pretty well from a production point of view. So if you catalyze that with a weak rand, it gives you a fairly good underlying earnings prospect for the full year.
Mark, what do you think about the rand? Is the rand thoroughly discounting at 10.75 a downgrade from S&P or whoever it is, or are people going to get a shock when that result comes out, which many people are saying it will?
Lindsay, it's a very interesting point, and we won't know until we know type thing. But what I found quite interesting is that we've had foreign flows into bonds, covered of course, but so we have seen good foreign interest creeping back. The rand has been weak not only against the majors, but it's been weak against the Turkish lira, the rial. So, it's been absolutely weak. And I think what we saw later on today as the markets came to close is that the rand actually gained some strength, but it's going to remain very choppy, Lindsay.
Very choppy. 10.73. Ashraf, you were nodding your head in agreement with Mark on these sentiments.
Yeah, and I think, there's a saying in the market, buy the rumor, sell the fact. Yes, the rand is weakening ahead of what will be a downgrade. I think, I don't think we need to speculate. I think we can accept that there will be a downgrade given the fact that we had negative growth in the first quarter. There's a risk of negative GDP growth in the second quarter. So they will make that move because they'll consider it fairly safe. I do think that the bond market at 850 on the 186 is relatively cheap, so you will find buying coming in at that level. It's trading around 847, 848 right now, and the rand might weaken on the announcement, but I think that would be the time to buy the rand in the short term because the market is discounting the news. So the rand could end up at 1084, 1085 on the announcement of the downgrade, but from there I think it will strengthen 15 to 20 cents.
Of course, Mark Ingham, the downgrade and the rating agencies' work is retrospective, and often what happens is that the work that they've done has been based on 1, 2, 3, 4 or even longer months worth of research, and people then go in the opposite direction. This time it might be different, and that's a terrible phrase. This time it's different. Do you think we're in recession?
I'm not convinced that that we're going to remain in recession for a full year. I think what we're seeing is the effects of the labour situation, which is appalling in South Africa, and so that's having the impact that it has. I think if we do get some stabilisation there, we could see quite a strong bounce back. Nonetheless, Lindsay, the underlying trend, and I pick it up from many of the companies that I'm fairly close to, is that it's very tepid out there, and each rand of revenue that you earn is very hard earned.
Just before we wrap up the markets discussion, I want us to touch on Afrox. I know that you read up on this one, signing deals by the day, it seems, because just today they signed one with the steel equipment firm, recently with an LPG contract as well, and again equipment. So it does seem as though they're going rather aggressively from a management perspective as to securing future jobs here.
Yeah, you know, Afrox has been doing some very useful things in the last year or two. Brett's been doing some good things as the MD, and I think the team as a whole is really coming through very well. And so we've had a raft of new contracts. The one with the sort of Columbus was really an extension of what they've already had, but it wasn't a fait accompli. So they really secured a very good deal for them, and in fact it'll now last 7 years. So all in all, I think Afrox is doing the right thing. It's not easy for them out there, but they're coming back strongly against their major competitors, and we've seen some very good price action in that stock in the last little while.